Bitcoin is making headlines with new all-time highs, and the altcoin market is bubbling with anticipation. Today, I'm going to break down the latest price action updates and what you absolutely need to keep an eye on as we navigate ourselves into the weekend. All I need you to do is hit that like and subscribe button if you haven't already, and let's get right into it. First up, let's talk about the undisputed king of crypto, Bitcoin. What a phenomenal run. Bitcoin has decisively smashed through its previous all-time high and keeps making new all-time high after new all-time high. Some analysts are pointing to a major price target of around $136,000 based on extensions from previous rallies, and others are even more optimistic with average predictions for Bitcoin by the end of 2025 ranging from 145 to 150K, and we've even seen whispers of 200 to 250K by year end if this current momentum can be sustained. So let's have a talk about that. Currently, Bitcoin is sitting at around 117,000. Doesn't look like it's running out of steam really anytime soon. On the daily time frame, we do have this little pocket of liquidity that sits around the 120K mark. That is a significant level because if we have a look at the heat map orders, we do have shorts sitting at around 120K as well, and they're quite significant. So there are a fair amount of large short orders above price. We can go up quite high, but the most significant orders that are sitting at one level is around 120,000. Below that, the next level is 119,500. So somewhere in that $500 range. But when you have a look at this heat map on its own, it's still fairly bullish because we've got high level buys literally right under the 15-minute support at the time of me filming this. But I'll come back to this later because for now, I want to stick the daily time frame, because if we can get through that little pool of liquidity there at around 120, the next high level zone is between 123 to about 132. But we do have a battle of time against us today because it is Friday, and so the market will close at the end of the US session. Now, if we are crazy parabolic into that, it can continue through the weekend because that's where irrational retail will jump on board. So it may be one of those weekends where you don't necessarily take full profit, but you may just protect your open trades. Again, I'll get into that in more detail in just a second. But before we do that, what I want to talk about first is actually the stablecoin dominance. Now, I've got combined here the USDT dominance as well as USDC dominance. And this is currently right at the support that we want to see it break down at about 6%. It's looking fairly bearish, which is a good sign, but we definitely want to see that clear break and move down towards at least this prior resistance right here. At the end of the day, it's in a downtrend, and that's what we want to see because that is good for cryptocurrency. If these levels break, it indicates that investors are ready to take on more risk, which fuels further market rallies. If stable dominance remains range bound, it might mean more of a trader's market than a full-blown explosive altcoin season, but we need to see that happen now. So either a breakdown or consolidation. We want to see the trend essentially continue to the downside. So the million-dollar question is alt season finally upon us? We're seeing increasing energy and momentum, which is often a precursor to broader retail investor re-entry. And this is where the real fun begins for those who understand how to spot the early moves. And if you are somebody who wants to spot those early moves, consider checking out our TTC memberships. This includes access to all of our courses, our live updates, and our private community. The link for this website is in the description of the video down below. Now let's go and take a look at the total chart. Speaking of altcoins, right now what we have is a beautiful break of this flag that we've been watching on this channel for quite some time. It's broken right out. It's come back to its prior resistance. A nice healthy retest would be great, and then hopefully continuation from there. So this is looking healthy, it's looking great, it's looking good for your altcoins. A word of warning, this likely won't be a repeat of the 2021 altcoin season. The market conditions right now are different, and while there's a strong potential, you still need to have a good trading strategy and really good risk management and not get too carried away, which tends to happen when everything kind of takes off altogether. We need to see consistent capital rotation from Bitcoin into altcoins and a sustained drop in Bitcoin dominance for altcoins to truly shine. So let's quickly touch on the traditional markets, because we know that if they take off, they're going to help crypto continue to the upside as well. And so let's take a look at the S&P on the daily time frame first. We did have a breakout to a new all-time high. So this front ran crypto essentially, and crypto is now basically catching up to that move. A retest of that would still be bullish. When you have a look at the S&P on the 4-hour time frame, it's currently holding the 50 EMA. So whilst it's above it, you would remain bullish. It's looking a little bit toppy with a double top here, but that could lead to just the daily time frame pullback. So I'm not too worried about that. If it does break the 4-hour 50 EMA, it's still want to see what happens at the daily time frame 50 EMA. Because if we do pull back to retest the prior resistance, it's just going to line up with the 50 EMA by the time it gets there. So that's going to be a really good area to look for continuation. And if we get those signals, then great, S&P is going to continue moving up, and that's going to be good for crypto as well. And the NASDAQ is basically in the same position too. We had the break of the all-time high first, and now we're just waiting to see if we get a retest. Now, the US dollar index, or the DXY, has been on a fairly bearish trend since October 2022. And some analysts are forecasting a long-term weakening of the dollar, potentially leading to about 92 to 93 in the next few months. So if they end up being right, that's going to be this range right here, so the prior low. When we zoom out, we can see that the DXY has been in this channel since 2006. And right now it's currently holding the bottom of that channel, but this analysis that I've done on another video where I was saying if we bounce off the bottom of the channel, we could just retest the EMAs. And if we can't break back above them, it would still be bearish. And that's when we would expect that the channel is going to break next. So this is all still what we're waiting for. It's a weekly time frame. It will take time for that to play out. But having said that, a weaker dollar is generally bullish for risk assets like cryptocurrencies, as it makes dollar denominated assets more attractive to international investors and can signal an increase in global liquidity. We're also hearing more chatter about potential interest cut rates from the Fed, which further contribute to the dollar weakness and fuel market rallies. So that's a key macro factor that we need to keep our eyes on. Now, one thing that is crazy to do in this type of price action is to be trying to pick the tops and short every small time frame peak formation without confirmation of an actual trend change. A prime example of a trap trader zone is the sheer scale of liquidations. We've had over $1 billion in the last 24 hours, with the vast majority being short positions. Now, this indicates massive stop hunts and short squeezes fueling the recent upward move, a sign of strong bullish pressure catching the bears off guard. So you always want to be aware of where the liquidity is sitting. So let's go and have a look at that. So this is where the current Bitcoin price is, and we can see that there is that bit of liquidity up at around the 120K region. That's the area that I showed you on my chart at the beginning of this video. From there, we spike literally all the way up to about the 130K region. So it's quite a big difference between these two levels of liquidity. Now, below price, we have around the 115 area, and then we still have the very large pool of liquidity that is at around the 106K. Now, that's there because of smart traders, essentially. So all this time here, the Bitcoin was basically sideways. People were opening long positions. They're well and truly in the money right now, but this is their liquidity down below. It's not likely that we're going to come for that, within the next couple of days or anything like that. These traders who have this liquidity here, they would easily be able to get out of their positions before the price went all the way back down there. Most likely they would already have their stop losses above their liquidation level anyway, so I wouldn't worry about this too much for now. It will become a concern if we actually start to get a big correction. So having a look at Bitcoin, now following on from my last video, I had noted that there were two rises that had already happened on the 1 hour time frame, and I was waiting for one more. The one more has turned out to be massive. When I look at this is reminiscent of a trade setup that we trade as part of the TBD system. It's not exactly perfect, but it's close enough. It's called a 33 trade, and I'm not going to explain it in this video, but the moral of the story is you basically get your rises with consolidation and no real pullback. And so when I look at this, this is a rise. This is basically consolidation. There was a little pullback here. So this is why I'm saying it's not a perfect 33 trade, but the end of the rules of it is more perfect than these two levels right here. And the reason for that is because when you get to the final one, so the level 3, it just goes up in 3 hits of volume. So you can see through here, this is 1 tiny short bit of consolidation. This is 2 short bit of consolidation. And we're currently in 3 right now. So that's actually a little bit of a caution. I'm not saying to go short. I'm absolutely not saying that. But I'm saying that if this turns out to actually validate as a 33 trade, combining that with the fact that it's Friday, and Friday is where the trap usually gets set for the weekend, not to mention we currently have a delta of 37 billion in liquidity right now, which is very, very high. The caution here is that if you are in trades that are doing really well and they're leverage trades, at the very least, at the absolute very least, take some profit. You don't have to close the entire trade if you don't want to, if you think that there's more room in this. You don't have to close the entire trade, but take something off the table leading into the weekend to move your stop loss well and truly up into profit in case it does swing around. Because like I said, this is reminiscent of a 33 trade. Combining that with the delta of the leverage that we have right now, combining it with the fact that we are heading into a pretty high level of liquidity above price around the 120. And also on the heat maps, we have those short orders that I mentioned that are quite large at around the 120K region. So with all of that in mind, you can't go wrong by moving your stop loss at the very least and locking in the profit that's underneath that. Would I be looking for shorts there? Not at this point in time. It really depends on how price reacts when it gets into the range. Reserve my right to change my mind if we get into the range and I see a trigger too short. But at this point in time, I'm really just waiting to see what happens if we can break up into that 120K zone. Now, when you're trading a 15-minute time frame, we actually had a reset this week. And a reset is where you have your 3-level rise, which is what happened this week. Now, I'm not going to go into the whole play that we did because we basically played this perfectly inside of the Discord, a little bit differently to what I thought was going to happen on my Sunday video. I was bullish. I know people say, oh, you were bearish. I don't know why you said that, because I literally said on the Sunday video multiple times that my preference was to move out of the weekend trap to the upside. I just thought we would get a stop hunt before moving to the upside, and we didn't. We just broke right out. I mean, what are you going to do? So I got the actual trigger wrong, but I got the direction right, which is the main thing. And then once we headed down here, this was my exact target, a 107,400, which is exactly where we went. But I won't go into that because I know Janet will cover this on her video that she does tomorrow. So from there, we went into our 3 rises, and then we got this reset right here. And that then started the 3 rises again. And that basically just means that the trend is feeding up into higher levels. So I just showed you how the 3 levels played out on the 1 hour. That's how the signal came in off the 15-minute to hold on to this for longer. So we had our level 1 rise. This here was another entry that I warned the community for anyone who had missed out on long positions to get in here. Again, instead of trying to short peaks like this, when you're in such a strong parabolic trend, look for retests of key levels to get in and ride with the trend as trying to go against it. If there's no signs of weakness, you shouldn't be opening shorts. And this is why we're seeing over $1 billion worth of liquidations to shorts, because they're trying to catch the top instead of just riding the trend that is there. And you ride that trend until the trend tops out. And so essentially that is what we're waiting for right now, for the trend to potentially top out, to protect the money that we've made for this week, to celebrate the fact that Bitcoin is at 118K, and waiting to see if we do get a final push into around 120, or will today's initial high of the day hold, knowing that the trap for the weekend gets set sometime in the UK or the US session today. So there may be volatility. If it starts to feel uncertain, then that may be your signal to not try and guess. Let it go for the weekend. If you're in good trades, just move your stop loss up to protect what you've done. Take some profit, as I mentioned, and see how the weekend plays out.